Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. Great to have you with us. Alex, Eva, Costa, Broker Daily Uncut.
How are we all?
Slightly uncomfortable today because we're in a different studio. It's put me on edge.
I reckon I'm more comfortable here.
I reckon it's
nice.
that or the 18 coffees I've had. I don't know which. We're also on a new day.
Yes, Tuesday.
Yeah, it gives us a little bit of time to evaluate what's happened on Monday. I think it's a bit more time for a pause for reflection. Yep. I guess starting off, we look at the auction activity. It's kind of pretty strong. I note that Sydney and Melbourne, very strong. They're up at that sort of 70% mark. So, yeah.
What is Adelaide doing again? I didn't look. Adelaide was really strong last week.
Really strong.
Last week?
I think it was
still?
late 78 from many. Yeah.
It
was very similar to
Perth Perth had enough auctions to get a result. I think sort of had about 15 auctions. They recorded 83%.
You're right. Yes, huge.
Rare
That's
for
really
Perth.
good.
It's a very small sample market, right?
Yeah, but still, it shows what sort of the buyers are doing in that market.
It's wild because
And
there's
it's
just still
started.
that shortage.
It's the second proper week, I guess you can say, not even proper week yet. And I think we were talking about it last week where it's been a really good start to the year for auctions and people are just going gangbusters just trying to buy property.
There's just tightness in most in most markets. There's indications that regional markets are also performing fairly well. Life goes on. We've talked about before.
We've seen, like in our business, a huge influx of existing clients wanting to go buy again quickly.
Where are they buying?
Victoria,
Yeah.
most of them. I
Are
would
people
say.
still buying in Perth?
No.
Yeah, I don't have many people in Perth. I've got a few in Adelaide. Adelaide's still sort of there. But yeah, the majority that are coming through now, like Eva said, are pretty much going in at Melbourne.
Still strength in Brizzy as well.
Yes.
Anecdotally, I was up there, caught up with the CEO of Wingman, and he also has he runs a major property management business up there, and they all they love buying. They're sort of property mad, and they're buying Gold Coast. The Gold Coast and Sunshine Coast still going strong. So look, it's all good.
Yeah,
apparently.
well, it's
Depends on which side you are. If you're looking to buy your first home,
Yeah,
it's
it's always tough buying a first home.
It is.
The reality, I'm not.
because you've got emotion that plays into it as well.
Yeah,
If you're talking about like first home to live in,
Yeah, well, that's
it's,
it. It's
like
not
the
just-
emotion plays on you where, it's where you're going to obviously have your kids and all that sort of stuff. So,
are you going to have your kids in your first home though?
Oh,
Maybe.
no. You would have them in a hospital if that's what you're going on. Yeah.
I did. Yes. No. Point taken.
Yep.
I wonder,
Sorry, I mixed up my words there. But
no. I
where
didn't know.
are you going to
didn't-
raise your kids? Sorry, is where I was looking to
But
go.
quite often, though, but quite often people are sort of looking to. So I'm just taking a small sample market of my colleagues. They often look to buy an apartment. We're obviously Sydney based, and then they will look to.
then they would look to go. But that emotion plays.
It
Because
does.
when it's an investment, it's basically the numbers.
Yeah.
And, no matter where it is or what it looks like, if the numbers look good, cool, tick, go do it.
Yeah.
Whereas when it's your home, it plays on your emotions where it's like, do I want to live in this street? Does this street have too many houses? Do too many cars drive past? Like, you start thinking about those sort of things.
Well, when you're looking for your first home, it's an individual choice, whereas investments crop up all the time. And if you've got the ability to detach yourself, there is still emotion in investment. I think it's a bit of a fallacy that there's no emotion. You've got the same. You've got a diluted appeal. We're all investors. We still get excited about investments. Yes, you're looking at the potential yield, but there's still the same elements of engagement and appeal with the property, but you take a much more sort of detached view because you're looking at the numbers. But look, all would appear to be good. So you're getting, and I know I saw your report at the end of last week that that inquiries are very strong at the moment, mainly from your customer base. Are you getting inbounds as well?
Yeah, we do. A lot of also referral of clients that have dealt with us and wanting to have their friends, family, and children actually starting to invest as well, which is exciting. I like that.
Yeah.
Yeah, when the kids are coming after the parents.
Yeah.
Are you noticing any trends, changes in the motivation or the sort of the actual activation of people coming through? And what would, to give you a bit more context, are people moving quickly and activating, or are they kind of having a bit of a think about it and dipping their toe?
No, there's no thinking about it.
Yeah.
Yeah.
Okay, that's good.
Yeah, I feel like it's very much, and I think some of the brokers at the moment are very busy because everyone is proceeding with what they said they would. When a few years ago, even 6 months ago, like, okay, I just want to check what my options are and see maybe if later by the end of the year or, now it's very much like, well, it's a bit of FOMO, I guess, of...
Do you guys find that you do pre-approvals very often these days, or is it just straight in?
We still do, because some buyer's agents do require a pre-approval
So they can
to
bid.
start the search.
Yeah.
But we used to renew them quite a bit because people wouldn't find properties within 3 months. These days, it's quite rare.
Really?
Yeah. They just do the pre-approval, go and find the property, done, which is great for us.
Well,
Yeah, it is
because
good.
there's more buyer's agents in the mix. I feel like a lot more people
Maybe.
are getting buyer's agents.
Yes.
So they're acting quicker, which means the properties are coming, through much quicker. Whereas back in the day, you'd almost just be the individual that was looking, and, they probably don't have time during the week or something like that. So it sort of just slowly goes. Whereas with the buyer's agents, their job is to find your property.
We still have the issue with first-home buyers because they take time, and that one property that was the dream property is gone to someone else, and that's where we have to renew.
Yeah.
How many first time? What's the rate? I know you don't deal with many actual first home owner occupiers, or you may deal with a few, but what's the ratio of owner occs and first time investors? Are you seeing a lot of first time investors, or are they mainly sort of interested?
Yeah, we do see a lot of first time investors. I couldn't tell you the numbers. A lot of our owner occupier loans are investors as well. We just refinance, cash out, whatever.
Yeah.
First home buyers would be less than 10%.
Yeah.
And there would be clients referred by their parents or family that have been investing with us.
Yeah.
Yeah. We love doing them. I think it's, I find that very rewarding for me to get someone into their first property.
And here's maybe a difficult question to answer. Is it getting harder to get loans approved? Because it always feels like it's never easy, or it hasn't been for a long time. But is it getting harder, do you think?
I think it's harder in the sense that you won't get the same capacity to borrow that you did 2 or 3 years ago with the same income.
Mm-hmm.
So, it is harder in that sense. Yeah.
Interesting.
Yeah, well, I'd probably agree with that. And I just feel like, well, as we all know, the inflation issue that we've got at the moment, what $1 does now is much less than what $1 was doing 2 years ago. So your borrowing capacity is obviously decreasing due to that. And it is causing a few issues, but that's where a good broker does come into play, where it's like, all right, your borrowing capacity is this. You want a bit more. How do we get you a bit more? Is it taking you to a lender that has a 2% buffer? Is it looking at your structure? Is it, whatever the situation may be, that's where a good broker does come into play. Whereas if you got just a standard broker, it's just going to be like, well, can't do anything for you. See you later.
Just slightly off topic, but I'm just curious, and not going to sort of solve it here, but looking at the SMSF market, share markets in real turbulence. It will be interesting to see how many people go, I've had enough of this, I'm going to switch to something a bit more stable. I'm so pleased that I dragged out a fairly significant chunk of my SMSF to purchase 6 months ago or thereabouts. I look at what's left of my SMSF, and it's so far down, and it's a sentiment based. I've got some speculative stocks, but I've got a lot of, sort of fairly steady ones, Zero being one of them. Nothing wrong with Zero, but just sentiment around technology is so bad. Zero is at like a kind of an 8-year low. And I know that there's so many stocks just based on sentiment have gone down. So it'll be interesting to see how, if I've got an SMSF and I've kind of realised too late that I've dropped 30, 40% in the value of my SMSF. I'm not going to start pulling my funds out now to start buying property. Maybe some people will, but it will be interesting. I wonder if people like me go, stuff this. When it goes back up, I'm getting out and I'm going to go and put it in bricks and
I've
mortar.
done the numbers on my SMSF when I first did it a few years ago and purchased property. I actually did the calculations what the average was that I was earning in my industry super fund. And I'm well ahead due to the fact that I purchased property. And I just did the average of what I was getting for like 5 years or something like that. So it works. And property is a massive safe bet.
Yeah.
It's not like you're buying some random farm in some regional town that no one goes to.
Well, you might be.
Well, yeah, but like,
No.
majority of the time those don't work.
Yeah.
But if you're buying, with all the data and everything that's available, I wouldn't say it's hard to get a bad lemon in that bunch, but the chances are,
It's small.
it will work for you. And it will beat the average of what your super fund is currently getting.
We'll have to take a break in a second, but just before we sort of close off, just again on a personal level, I don't like having a superannuation that's beyond my control, whether it's sat with a manager that strips out lots of costs and does a mediocre job, but equally managing my own super and chucking it on various stocks and shares it's again beyond my control. Yeah. If you as an investor, if you use your SMSF to buy property and you get good advice, and there's plenty of good advice around. Look, you can take your pick. You can, if you have a really, really good property focused accountant, of course, a mortgage broker. Now they're not going to give you advice on where to buy, but if you have a good trusted broker, they can give you very, very solid guidance around, sort of how to invest and what the costs are going to be investing. And then you've got, and at the end of the day, the lender is going to look at the asset that you're purchasing. They aren't going to fund it if it isn't, you've got so much going for you. And then as a long-term riding out the bumps and waves, and guess what, with an SMSF, as an investor with direct shares, I can freak out one day, panic, the old fear and greed, and sell everything at the bottom of the market, which I've done before, rare that you sell at the top. With property in an SMSF, you just bite down on the gum shield, and you ride through the lows, and then you come back out.
It's sort of like a set and forget asset.
It is,
because you're not going to wake up one morning going, "Oh my God, it's plummeted." Whereas with shares, you do that, and that's why it's sort of the safe bet. And like we said before, property is going to slowly go up and up and up. Yeah.
We'll take a quick break there, guys. Back in a couple of seconds. Welcome back. Broker Daily Uncut. Eva, Alex and Costa. Hey, just offline, we were having a conversation about my worst favourite subject, which is AI. I get sick and tired of hearing about AI. However, I have heard of it before and I do understand that it exists. But look, bring these into context. You were sort of chatting about some developments that you say are pretty transformational in terms of the process of broking through quickly.
Yeah, I've been the last few weeks trying to find. We've, as you said, we've been hearing about AI for broking for quite some times now, and I was always quite disappointed when I looked at it and realized, well, it's not actually going to save me a lot of hours in my day or whatever it might be. But last week, quickly actually came up with quite a few really good things. One of them being like a chat GPT called Jiffy, where when we have difficult scenarios, we can ask Jiffy and they would tell us, well, maybe this bank or maybe this one, but do it this way. Gives us quite a bit of insight, can really look at all the policies and black and white text on what we are after, which, the old-fashioned way, I would have to pick up the phone and hope that the BDM I want to call is picking up the phone and give me the right information. So that would take hours sometimes. And we had a case not long ago.
We were talking about it
with Costa
yesterday.
Yeah, we talked about it yesterday where I and Beck looked at the file like, okay, what are we going to do with this? And it took hours we found a solution.
Yeah.
But I'm really curious to see if I put it into that Jiffy thing, if it would actually tell us this is the solution and would have saved the three of us.
It was, hours. I reckon we've spent 10 plus hours on that file. And listen, it's our job as brokers to find solutions for clients. But things like this that Eva was saying, it just makes life so much easier. It cuts out, maybe it won't cut out the whole 10 hours, but it cuts it from 10 hours to maybe 1 hour. And then that other 9 hours you can spend nurturing other clients or past clients.
Efficiency is the name of the game.
That's what it is.
It is. And I just, I'm not someone that remembers policies forever. Like I would just have a client, I'll check it. Okay, it works there. If in 3 weeks' time I've got the same question, I'm like, oh, where is that again? And what bank? I'll have to go and check it again.
But here's the thing.
Takes this off.
Yeah.
Like,
So the human element in broking, I'm going to go back, sort of several decades or certainly a decade or so. Good brokers would work proficiently with 2, maybe 3, possibly 4 lenders because, as you say, they can only get really close to the policy and to the teams around those. And you can't, you got 32 lenders or 40.
You can't remember every
that's
policy.
very true for what you're saying. Like, and I think for first-home buyer type of brokers, you would deal with 4 or 5.
Because it's a human.
Investors, like on average, our thing shows 17 per broker that we use constantly. So that's a lot.
Yeah.
And because you're dealing with different scenarios and different structures, you need to find a lender that has a policy that fits that specific person and self-employed. Like when you're dealing with investors, it's not just go take them to that bank. There's never a going, I'm going to take you to that bank because so much can change from the assessment process that you go like, well, and you can't remember all policies. It's just not possible. And everyone's niches and stuff like that. This just makes it easier.
Mm-hmm. So looking at the demo, like I signed up for the demonstration that Quickly did. They did it on someone looking to do a family pledge, I think was self-employed and through a trust, which takes quite a bit of complex bits. And the thing, look at the bank that you prefer and then goes down to, well, maybe the banks that you like to work with don't work for this. And then it gives you another option. And all of that in probably 3-4 minutes.
It's very impressive. I've got a question for you guys. Excuse me. So I'm obviously very connected with you and the tools that you use to deliver better outcomes for your customers. How much have the lenders changed in terms of their efficiencies over the last 5 years? Have you? I'm serious because
good question. Some of them are great. Like Macquarie just does things in 20 minutes. Some of them is like it goes in a vortex. If someone finds it in there, you're lucky.
Because this is a really interesting point.
Like a month ago, I put in an application with Macquarie. In 45 minutes, I had formal approval.
Yeah.
And I was just like, that was probably the quickest I've ever had. Whereas for some, you're following up and they're just like, like we're about to look at it. Like,
someone went on holidays. We didn't pass.
Yeah, pretty much.
Just unbelievable.
Yeah, sometimes it's like, oh my God. Yeah.
We won't name and shame. Look, it's good to name those who are doing well.
Macquarie is doing great, I must say.
Just out of interest, are there any of the non-ADIs that are using tech very effectively or that are able to deliver, or there's still a lag between?
Yeah, there is.
Because but I guess with automation is less of a thing
agree
because you've got a more personal assessment of credit often as part of the proposition with the non-banks.
Funny enough, I found that those assessors where it's more manual are actually better.
Yeah.
They're more customer focused. They would call you if something is wrong. They would work the solution
with
you. Well, other banks would be like, well, I don't like this, it doesn't work, just send it back to you.
Yeah, it's all done through back channel messages.
Yeah, there's no discussion. So the speed is there, but there's no service, I guess.
This is the opportunity on the lender side is to, and I'm sure they're spending a few bucks on their automations and AI, but it's just interesting, where you spend money and where you waste money because it's all about outcomes, right? For brokers.
Yeah. Yeah, and then I get annoyed when that happens. I'm like, you know what? This bank is out of my choice.
But you're human because it's what you do though, right? Somebody's not delivering to you, you go, get stuffed.
And if it's complex and I get it, okay, but if it's something that should be pretty straightforward, like sometimes we get filed back like, it is a shortfall of $3.
What?
Yeah.
Yeah, like, and sometimes it gets
just
lost in
reduce
transaction.
the loan by $3 and let's go with it. I'm sure the client will be fine with that.
Yeah, like sometimes.
It's a ridiculous thing. Like
Crazy.
it's a computer saying it's not working.
Yeah. Computers say no.
Yeah, computer says no. It's
Yeah, the
minus
calls
3.
are good because if there's an issue, you can discuss it with the assessor and be like, they see it from one lens, you see it from another lens, and then you work together to get the deal working. And it's not like you're doing anything out of scope. It's just you're sort of getting your thoughts and their thoughts together and finding the solution. So when it's just done through back channel messages, it's hard to explain what needs to be done. And obviously they're for more difficult scenarios, not just your, standard PAYG person who wants to buy an investment property. So yeah, like those back channel messages, and then you can't even get contact an assessor. And you're just like, who are you?
I don't think there is an assessor. That's just it. It's a computer saying yes or no.
Pay attention, lenders.
Yep. But
You're hearing it here. I'm sure you're hearing it from all over the place.
Yeah, I was going to say, I'm pretty sure a lot of people have the same problems that we're facing.
Yeah. But quickly on top of that, has also now nailed SMSF servicing calculators.
Yeah, right.
Which
it's very good.
Until very recently, we had to go and try everywhere. And SMSF can be a bit more complex sometimes. So that's one thing.
Yeah.
They've nailed the low doc calculations.
Yeah, low doc.
Look, I think you're moving into through technology.
Yep.
Some instances AI, some instances automation. There've been many cool things that have happened over many years. So this is the thing with tech. There's lots of stuff that the wheels just spin, but there's been some very cool developments in terms of going back, sort of a decade.
Yes.
The ability to kind of read, documents and automate that. But
that never came down to broking, though.
No, but it's changing.
It is.
Well, up until COVID, you still had to wet sign things, didn't you?
Yes.
Yeah, that's right.
Yeah. So COVID actually
allowed
allowed you to do e-signs, which you just think it was being used for.
We see some banks are still wanting a wet signature.
Yeah.
It's like, oh, come on, really?
We'll take a quick break there, guys. Back in a couple of seconds. Welcome back. Great to have you with us again. Alex Costa. We're unpacking AI. We don't know what we're talking about, but we'll have a go. But just while we're on that line, it's something that good tech impacts everybody. It's clearly transformational for brokers. Some lenders are delivering it the right way. The outcomes flow through to borrowers. But I wonder how, as things advance, as your tech and access to tech gets better, how this will eventually impact the borrower. And, again, off air, you sort of voice your concerns about, the long-term relationship. Will tech have some sort of impact in replacing brokers? I don't think it ever will. But look, there's obviously a lot of focus on the roles that brokers play and the impact they have on their customers.
Yeah. Look, I do feel like eventually for deals that would be simple.
Vanilla. Are there really vanilla deals though?
Yeah.
I feel like first-time buyers are pretty vanilla, and that's why I love them. It's like, well, tick, done. Investors and SMSF and all that, but eventually tech could catch up with all the complexity too. I don't know.
I can't help but think, even with the most vanilla deal, you kind of want to speak to somebody. But
that's our, let's say our generation, like kids born these days.
What do you mean our generation? You're at least 30 years younger than me.
I feel like my kids, they would be happy to find the answer on.
Yeah, but the answer's not
But
always
it's a lot of money,
correct.
though. Yeah, there's a difference between, getting an AI answer on, what supplements should I take?
Think of it that way. Someone asked me the other day, like, let's say you go for a skin check and the doctor does a skin check on you, human. Next time you go, would you trust that he remembers everything he's seen and how it was? Or would you trust a computer that actually goes through your body, checks it, and tell you exactly what's changed since then, or if there's anything that, sometimes you would trust a computer more than a person.
That's true. But I think there's just something about borrowing a lot of money
that people want to talk to
so fundamental.
Yeah.
But look, I think, you've obviously got direct to lender. There's the lenders are focused on that area, and there's a proportion of loans that do go through direct, which would be those vanilla loans.
Yeah, they're doing, some of the majors are doing like just online lending now. But again, they're very, very vanilla sort of deals.
Maybe because we do it all the time, we think it's easy to
I think
choose
also
fixed variable offset, but maybe people don't.
Yeah, I think
we also often operate in the realms of sort of high LVR lending. And I think in that higher LVR area, we're thinking about the impact of rate and policy. And, when you're in that, and there's a lot of, most customers come through are in that kind of area. If you're getting a 50% LVR, I mean, I would probably, if I was ever in a position, I probably wouldn't worry too much about it. I'd go direct if I get done quickly. if I could get it done like that, because I'm experienced investor.
Yeah.
So I think we talk about first home buyers, but you've also probably got people at the other end of the spectrum where they've got a large portfolio, or they can work out what the interest rate is, and if it's 50% LVR, then a refi, maybe you wouldn't need to speak to a broker. I don't know. Anyway, up for debate. But you were mentioning you were sort of chatting away about bid.
Bid. So that's been obviously, as we are credit rep of Connective, we get checked on our file. We can see like the last 6 months or so, it's very picky what they require.
So can you give more detail?
More details, really, why did you choose this product over the next?
Okay.
Or if you actually do choose a product that is not the cheapest that was available to your clients, you really have to be like, okay, why did I take this over this? Obviously, ASIC is pushing on that lately as well.
Yeah. Here's the thing, though. Okay, I'm just going to pick up on that.
Yeah.
That's because that's a human thing, and you can have I would assume there's some automation checking you as a human. Yeah, is that correct? Well, how do you get scrutinized?
Yeah, it's through the compliance check from our aggregator.
From your aggregator,
yes.
Okay,
yes.
Which I would imagine some sort of automation type thing.
Yeah, I guess they just pick like
but
6 every.
So that's where automation works over a human to scrutinize you, and you have to answer.
Yeah.
But here's the thing: if everything's done through automation can't govern automation.
Mm-mm.
And if you end up with, I'm serious, you end up with complete broking, there is going to be no oversight, and you can't send a robot to prison because they've, you can send the institution if you will. You've got to look at it logically though.
Yes.
Who's going to own all the automation? It would end up, you'd imagine, would go back to the banks or to big faceless kind of organizations. There is an accountability with brokers that cannot be automated. And I think there's a sort of a two-way thing with a human in the middle, i.e. a broker. You've got a customer that wants, a warm-blooded human being that wants to deal with the broker. And then you've got scrutinization of that human being that's accountable to the customer.
Mm. Yep.
That's what I think anyway.
You make a good point there. Because, like I said, as Eva was saying, in the bid, you have to mention why it's not the cheapest. And then usually, a lot of the time, it's not the cheapest is because of the structure that particular person has. And that's common for us because we deal with a lot of investors.
Yeah.
And we can't give them the cheapest because of a policy or a servicing difference. So is an AI machine going to do that?
But this is the beauty of the complexity of being a broker.
Yeah.
Because it isn't just, it's not a matrix. Oh, cheapest loan.
Yeah, here you go, cheapest rate,
There's a whole host of things which automation can never do. For example, speed of turnaround.
Yep.
Like I might be buying. I might have bought recklessly. Well, I often buy recklessly, you'll know that. And I might have a really short settlement and I've got to get a loan settled. Well, guess what? The cheapest loan isn't going to sort me out. I need the lender that's going to be able to turn the file around the quickest. And that's because the broker is on the phone to their relationship manager or to credit going, look, I've got this guy, he's an idiot. I know him very well. He's done it again. Please help me out. And we've had it numerous times.
Yeah, that's true. I do like to use AI though in my bid comments to put it in a way that clients understand, because sometimes you forget that the client in front of you doesn't know what's an offset, doesn't know what's the difference with the retro, doesn't. So and I guess maybe Jiffy could be helpful in that case as well, where or even ChatGPT, where you say, okay, this is the situation of the client, how do I explain that this bank is the best for them based on this.
Yeah.
So instead of you typing everything, making sure, grammatically correct, blah, 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 it just does it. And I guess you could ask also, is this compliant or is this meeting the bid's requirement?
I think it's a fascinating area again. And I look at broking and I look at the amount of work the brokers put in, the value that they offer. And I have without being too negative, I have over a sort of a sense of impending doom that will get some sort of nonsense come back. It's a cyclical thing where you get the government or some sort of royal commission come back again because some idiot doesn't understand broking and comes back and goes, oh, hang on a minute, all these brokers are earning all this money. I still hear the occasional stupid comment from all sorts of people that think that loans are more expensive through a broker or that commissions are disproportionate. And again, and I noticed, that there was a brokerage that was giving away commission. And I know some brokers give referral fees, and I know that some may do refunds on a very small basis, but seeing a brand that would purport to being a national brand saying, hey, we all get paid too much money, why don't we share it out, worries the heck out of me. Anyway.
Yeah, that's an interesting one.
I'll close with that. Guys, thank you very much. Appreciate you taking your time out of your day to join the podcast. It's very valuable for me. It's good to get your insights.
Pleasure.
Yeah, thank you very much. For everyone else tuning in, it's great having you with us. Do give us your thoughts and your comments. I love chatting with Ever and Costa, but your feedback is very important. Do let us know what you think. Have a great week.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.